Michael Burry, it started already. Financial crisis 2022 coming soon. Big short investor has dire warning for economy, comparing stock market state to pre-1929 and dot-com crashes. Burry warns more speculation than 1920s, more overvaluation than 1990s, more economic strife than 1970s. Today we're going to talk all about what Michael Burry just revealed about the stock market crash coming in 2022. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. The investor made famous by The Big Short has issued a dire warning about the state of the stock market. Michael Burry warns that stock market speculation has reached levels not seen since before the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. He also worries that geopolitical and economic strife exceeds that seen in the 1970s. His fear appears to be that we're fast moving towards an economic calamity, and government regulators such as the Securities and Exchange Commission and the Federal Reserve are taking no action to prevent it. In a tweet, Mr. Burry wrote, "More speculation than the 1920s, more overvaluation than the 1990s, more geopolitical and economic strife than the 1970s. He added, players grabbing the barrel of Kyle Rittenhouse's rifle while SEC Gov and Federal Reserve nod approvingly. He attached an opinion piece from the editorial board of the Wall Street Journal headlined, Rivian, the government unicorn, and subheaded, the EV truck maker is worth $120.5 billion. It has sold 156 vehicles. Electric vehicle manufacturer Rivian, backed by Ford and Amazon, went public this week, fast becoming the second highest valued automaker in the US after Tesla. Valued at more than $100 million by the end of its first day of trading, it has nevertheless only sold less than 200 trucks and makes almost no revenue. The company plans to manufacture more than 1 million vehicles a year by the end of the decade. On the same theme, Mr. Burry also alleged in a tweet this week that Tesla CEO Elon Musk might be selling stock in the company to cover personal debts and raised the possibility of the company losing up to 90% of its value, as happened to many firms in the dot-com crash. He noted that even Mr. Musk said that the company was overpriced in May 2020, when it was approximately 16% of its current value. The tweet has since been deleted. Mr. Burry is most widely known for calling the housing price bubble that developed in the 2000s. He shorted the housing market, selling market positions on the assumption that housing prices will drop, and when the market collapsed as he had predicted in 2007 and 2008, he made a fortune. The subsequent fallout of the housing bubble bursting saw 3.8 million Americans lose their homes and triggered the global financial crisis that rippled around the world, leading to the Great Recession. Mr. Burry also focused on inflation this week, noting that the current high rate of inflation is effectively depressing wages, which, although growing, cannot keep pace. He adds that as a regressive tax, it hurts lower-income people the most. He wrote, American real wages, adjusted for inflation, are down 2.2% since January 1st. Seems the only truly meaningful thing that's down this manic year. Inflation is a massively regressive tax. Never forget it. Mr. Burry is known as something of a doomsayer, and while his Twitter account is @MichaelJBurry, his username is Cassandra, the Trojan priestess of Greek mythology who made accurate prophecies but was never believed. In 2021, a flood of new trading platforms emerged in app stores. Robinhood, E-Trade, and Fidelity are just a few examples, and they have been booming like never before. The Charles Schwab Corporation alone added an unprecedented number of 3.2 million new brokerage accounts just in the first quarter, much more than in all of 2020. Even big short investor Michael Burry has made a comeback to his Twitter account last week to compare the current options trading frenzy to the widespread speculation that sparked the Great Depression. Only this time, as Burry noted, the stakes are much higher. A year and a half after the 2020 stock market crash, expectations for a much sharper correction have never been higher. Market insiders are expecting a huge pullback before the year's end, and a number of indicators are signaling that another financial meltdown is looming on the horizon. Many major Wall Street players are now facing overwhelming uncertainty as they've started to get ready for the worst-case scenario. More than 3/4 of respondents to a CNBC Delivering Alpha investor survey say now is the time to be very conservative in the stock market. and they highlighted the mounting risks of a crash. Respondents included at least 400 chief investment officers, equity strategists, portfolio managers, and contributors to the financial news outlet. In a fresh analysis published earlier this week, financial analyst Charles Hugh Smith described how the Fed's monetary policies have helped to create the biggest financial bubble in history, known as the everything bubble, which includes stocks, bonds, and housing. The expert says that now that liquidity has to stop propping up the markets, a massive bubble burst is just a matter of time. The problem here is all speculative bubbles pop, and so the central bank's inflation of a speculative everything bubble has backed the entire economy into a corner from which there's no escape. Either the bubble must keep inflating to ever dizzier heights of delusion and risk, or the bubble pops and lays waste to all the phantom wealth, Smith noted. With all this in mind, are we really crazy enough to believe that this bubble will be supported by artificial money forever? Are we really crazy enough to believe that creating trillions of dollars out of thin air and then dumping all this money into assets that don't increase in utility but only in perceived value is sustainable and solid foundation for our economy? We all know better than that. A huge stock market crash is fast approaching, and people need to run for the exits before an economic disaster is finally here. Burry, in some way, is saying he's the financial version of this priestess. He's freely giving out warnings on his Twitter account, but not too many people are paying attention. They're just enjoying the short-term returns that they've had. But let's see who wins in the long term. So I want to dig a bit further into some of the things that he's saying and what we need to watch out for as investors. The next thing that Burry talks about that's inflating stock prices is all of this passive investing. As he said, passive investing's IQ drain and #stonks group hype add to the danger. He said a while ago that index fund inflows are now distorting prices for stocks and bonds in much the same way that CDO purchases did for subprime mortgages more than a decade ago. The flows will reverse at some point, and it will be ugly when they do. Burry mentioned that central banks in Basel III have more or less removed price discovery from the credit markets, meaning risk does not have an accurate pricing mechanism in interest rates anymore. And now passive investing has removed price discovery from the equity markets. The simple thesis and the models that get people into sectors, factors, indices, or ETFs in mutual funds mimicking those strategies, those do not require the security level analysis that is required for true price discovery. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.